From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 18th, 2017. Today we're going to be taking a look at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. Right now, we're looking at the daily time frame, and in the live trade room every day, we've been discussing the pattern of these trends, and basically for each month of 2017, we have seen a new trend. January was the black trend line, February the red trend line, March the blue trend line, and much of April has been the green trend line. But we're seeing a little bit of a change in this pattern where over the past week or so we capped out around the 100 period simple moving average, and we've been seeing the market change already here at the middle of April back to a downside momentum. You can see the little tiny red trend line over here on the right hand side. So what we're going to look for is the potential shift in the pattern, and it can turn lower once again for the US franc. But we want a confirmation. We don't want to assume that it's going to turn around and go down. We want a confirmation of that. Let's go ahead and zoom in a little bit on the pink shaded area that we're looking at here between 1.0010 and 1.0030. Well, over the past 1, 2, 3, 4 days, so Wednesday, Thursday, Friday, and Monday, we saw support at the pink zone. Now today is the first time we see a significant push underneath the 1.0010 level, the bottom of the pink shaded area. Well, we haven't seen it under there in a while. We see over here resistance and congestion in the pink zone. And over here on the left where the black circle is where we finally broke underneath it in the first leg of this trend, the blue trend line. It was moving lower, open and close, got underneath it, and then continued down to the bottom. So that black circle is very interesting for today. The second black circle over here where the red trend line is, you see a big red candle, and then the next day turned around and went right back up. So if you would have assumed that that was the breakout, you were in a difficult position there. The blue box that's over here on the left hand side, look at this, 1, 2, 3, 4, 5, 6 days went into congestion under the pink zone, above the blue zone, just underneath here. So what I'm trying to say is we want to confirm that this is a real breakout. We don't want to assume it's going to break out. Yes, it's a red candle, it's going lower right now, but as soon as we assume that it's going to go lower, it could turn right back around and go back up, and that big black circle there shows us that that's a possibility. So we don't want to assume, we want to wait for the trade setup. Currently the market's sitting right on top of the parity level. The yellow horizontal line on the chart is the parity 1.0 level. So we want to be, of course, sure that it's going to break through there and not find support and turn around and go right back up. So if we're going to sell it, selling on top of that parity level is a little difficult as well. We also have several Fibonacci ranges drawn here on the chart, and you can see just underneath the 1.0 level into the 99, 90s, and 80s, we have some Fibonacci, these blue lines that sit here, some Fibonacci retracement levels that sit there, 382 by the way, of the green trend, sits right there underneath the parity level. So we know that there's potential support and reversal to go back up, and we want to be sure and look for the setup for the breakout if we're going to see it go lower. Now, there is reasonable expectation that it's going to go lower. The current momentum is bearish. So if we're going to focus on that, we want to watch for the trade setup. My personal take on a breakout is not just a close, not just a challenge, but for me, I'm looking for an open and close to improve my confidence that it's going to continue to go down. So we're not going to see that here likely today on the daily time frame, no open and close. But what we can do is take it down here to the 4-hour time frame and begin looking for that open and close, the breakout, the real deal breakout underneath this pink zone. Not just a challenge, not just a test, not just a touch of the parity level like what we've seen already today, but a real breakout underneath this pink shaded area. And again, for me, that's going to be an open and close, a singular candle body. So we have a few hours to wait for the setup to happen. We still want to look for the lowest risk and highest reward possible. What does that mean? Low risk means we want a stop loss that's fairly close and a profit target that's fairly far away. Well, right now, without the assumption that it has broken underneath the pink zone yet, our stop loss is still pretty high because it could turn right back around and break back above the yellows and go higher. And our profit target is being very limited and capped by the parity level right now. It has been unable to break underneath there. Our profit target will increase likely down to the blue shaded area down here once it has broken here. So our profit target has not increased yet until it has actually broken through this pink shaded area. Then our stop loss is just above the pink zone, our target is the blue zone, and then we look to take the trade and target back down here into the mid 9900s. But until it actually breaks, I'm going to be very cautious and wait for the trade setup to happen. The open and close under the pink zone, maybe even a retest and rally underneath it, bumping its head into that pink zone as resistance before falling back down to the blue zone for the dollar franc this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.